Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Becco and my partner, Hari.
Hello.
Welcome to our podcast. This podcast, we're going to talk about McDonald's. It's a franchise that everyone should know if you live in 21st century. And we'll talk about in detail if this company is worth investing into, looking more into, or if it is not. We'll go into details in this episode. All right, let's start with our disclaimer, Hari.
Yeah, this is the Value Investor TV podcast. We are a podcast that helps you understand the concepts behind value investing. We don't know your specific financial situation, nor are we financial advisors. So please consult with the appropriate advisor before making any financial decisions.
Great. Okay, so just housekeeping items here. As we do with any of our episodes, when we analyze companies, we go down a checklist, and this episode is not an exception. We will also go down a checklist. And if you would like access to our checklist, please email us at info@valueinvestor.org. Also, if you would like access to our Slack community, Slack channel, please also email us at info@valueinvestor.org. And one last thing before we start, this McDonald's suggestion came from one of our listeners. So if you guys have a stock that you would like us to cover, please also email us at info@valueinvestor.org. All right, I'll toss it over to you, Hari, to get started.
Yeah, so we're going to go down our checklist, and the first questions that we're going to ask are related to the business. So Becco, tell me what the company does, what does McDonald's do, and be able to answer this succinctly.
Okay, so this is a company that is very well recognized. I'd say it's one of those businesses that is most recognized. When you talk about brand mode, which we will talk about later in the episode. But McDonald's is really a classic definition of how a company, an organization is really leveraging their brand equity, brand power, and it's the golden arches is recognizable everywhere. There's things like McDonald's Big Mac Index, right? People talk about Big Mac Index. So it's really widely recognized all around the world. But, effectively what they do is they're, a fast food restaurant. They started in 1955 in San Bernardino, California, now headquartered in Chicago. And as I said, they are, they're everywhere. They're basically everywhere in 119 countries. Their market cap, just to level set our discussion, their market cap is around $130 billion, and they bring in about $21 billion in top line. So just kind of give you the top, big picture of how, of where they sit in terms of scale and size. And we can dig specifically into their business lines. I think a lot of people know McDonald's as kind of the creator or a company that really popularized this concept of franchising. And if you look at their business segment, it certainly is true. So franchising is, they make up significant portion of their revenue through just franchising. So franchising meaning they don't own the stores; they work with franchisee who license from McDonald's to own a McDonald's and operate a McDonald's. So as a company, they don't necessarily own the business, but they also, but then they support the franchisee who gets the right to open a McDonald's. So that's the franchising business. But they also have their own restaurants. They own and operate their own set of restaurants themselves, and we can dig into more in the subsequent discussions. But that's basically it. They franchise restaurants to franchisees, and they operate their own restaurants.
Boy, Becco, that was super succinct.
Super.
I would have also accepted they're a fast food restaurant, and then we could have moved on, but that's okay. So
just wanted to give you sufficient color.
Yeah, because nobody's here who's has eaten at a McDonald's. I mean, we've never heard of that before. So, okay. Well, I think you amidst that verbal cornucopia kind of already said one of the competitive advantages for this business, but does the business have a competitive advantage? And If so, describe it in one of the categories below. So we'll go through the categories. The first being a brand moat or competitive advantage.
Yeah, so definitely brand, right? The Golden Arches is recognizable pretty much everywhere around the world. They operate in 119 countries, and they're still able to maintain that brand presence. So I think that's something that we have to recognize as a strong competitive advantage there. I would put McDonald's in the category of Disney, or I would put them in the category of Coca-Cola, for example. It's recognized basically everywhere. Um, and one thing that is interesting about this is that they really do a good job of localizing their brand. And what I mean by that is, say you go to Korea, or say you go to Japan, or say you go to, I don't know, wherever. They really try to do their best to try to infuse their local taste into their menu. And I think, and then on top of that, they run on franchisee model, right? And so people who run the stores are most likely going to be locals because they're franchising, right? And so they're going to know their community the best. They're going to hire people from the local community, right? It's pushing decision making down to the franchising level, and they're able to kind of keep that kind of closeness with the community while at the same time maintain that global presence, global brand recognition. So they certainly do have a strong competitive advantage in that segment.
Okay. Um, let's look at the next question here, because I think we're going to be talking about the brand a lot as we go through this. But um, does McDonald's have any what we call network effects? So maybe give us your thoughts on that and see if they do have anything like that.
Yeah. So my answer to that is a no. Um, because again, so maybe going back to the definition of what this is, right? It's a concept where the more people use it, the more valuable the product becomes. So a classic example is like eBay or Facebook, right? The more people use it, the more valuable it becomes. Um, Here, it's not like that, right? The fact that you buy McDonald's doesn't increase the value of Big Mac.
Okay. Um, I'll buy that. Switching cost moat. Do you think this company has a competitive advantage that of stickiness where once you buy a McDonald's, um, it's hard to switch to another restaurant?
Yeah. So that's a no. I think they tried to do something like this on a very macro scale, on a very micro scale, right? So like collectibles for kids items, things like that. Like, kids get to, like collect, toys when they get Big Mac or something like that. But, it's immaterial to the business. When I get a Big Mac, I can just walk down the street and get a Whopper, right? It doesn't prevent me from doing
Yeah,
that.
but who would want to eat a Whopper? I mean, that's just gross.
I don't know. I mean, Shake Shack. How about that?
Yeah, if I want to spend $12 on a burger, no thanks. Okay. Um, you know, the next question, um, you know, because of the company and brand, do you think, or economies of scale, I guess, do you think they have a low cost moat so that they're able to be undercut their competitors in terms of pricing?
Yeah, I mean, I think it's already commoditized to the point that it doesn't really. Everyone is. I mean, I guess they're. I mean, they're tackling a completely different market segment. For example, like if you think about Shake Shack or someone else, they're targeting more upmarket. Like McDonald's is as low as they can be in terms of price. So I don't really think that there is a. I don't know. I don't really think that there is a competitive advantage inherent to this. I mean, I guess like they did pioneer the restaurant, like fast food industry, like really globalizing the fast food industry.
Well, but so I
Um,
mean, the question that you would really want to ask here is because of their size, are they able to purchase potatoes, meat, etc., lower than than their competitors?
yeah, the answer is yes. But my subsequent follow up question to that is, yes, they might be able to, but the difference between the purchasing power of, let's say, McDonald's versus, I don't know, let's say their competition like Shake Shack, or I don't know, better competition comparison would be like um, Burger King. Like the price differential, does it really make a material difference to customer? It costing 10 cents more, does it really make a material difference that I will go with McDonald's versus Whopper?
Well, I mean, I think the thing that you're looking for here is, let's say that McDonald's charged $2, and Burger King has the equivalent amount of meat also selling for $2. But if McDonald's cost is 80 cents to give you that, and Burger King's is 90 cents, right? That 10 cents is a fairly significant thing when you add it up over billions of, orders over time, right? So, I mean, the question really, gets down to the fact that, I mean, I don't think that they do. I mean, they have an economies of scale, I think, that is significant, but I don't know that it's enough to really warrant a low cost moat per se.
That's where I'm leading.
Okay.
Right. I think you and I are in an agreement on this one, that they do have economies of scale, but it doesn't really have a material impact on the business and retention of the customer and winning customers over and things like that.
Okay. Next question. Does McDonald's have any intangible assets that you would consider for their competitive advantage?
Tie this back to kind of the brand, right? The Golden Arch, the Big Macs, right? These are sort of, they're iconic brands that is widely recognized around the world, and it does materially impact the business.
Okay. Well, we'll keep going because I think we're going to get into more interesting stuff as we go through this,
Yeah.
potentially. And I think we all can agree that the moat is significantly tied to their brand. Okay, so looking at that competitive advantage that we've talked about, how durable do you think that competitive advantage is? And, what would be the potential risks if, you and I were trying to compete with McDonald's? What would that, how hard would that be?
Yeah. I think so. I do think that it's very durable, but I do want to point out a couple of things which I think has material impact on the business. One is that there are brands that are trying to play in this space. For example, I think the most shining example is Shake Shack or Five Guys, or these up and coming, not up and coming, but they've been around, but they're relatively newer than McDonald's, and they do play in this space. But the way they have positioned themselves in the market is that they're not playing to the same market segment. They've moved up market a little bit, right? And therefore they charge premium. So that's one thing that I want to call out. Another thing that I do want to call out is that there is just general awareness about health. Like, people are more attuned, they're more aware they're more health conscious. So spending habits is changing. And so that's another thing that I do want to call out. But having said all that, though, McDonald's is McDonald's. People eat a lot of McDonald's everywhere around the world. And in terms of their brand, if their brand is the tip of the spear, I don't think that tip is going to be is going to get dull anytime soon.
Yeah, I mean, I think when you talk about competitors, I mean, even it's not even chains; it's local markets. They have competition. The local burger shop, and let's not forget that it's not even other businesses that make burgers. It's also businesses that make, Taco Bell would be a competitor. So there's a ton of competition, but I would say at the same time, you can eat at McDonald's 3 times a day, right? So they have an opportunity to get you, one or 2 times, or 3 times a day if they had, if they wanted to, right? And so there's a potential there for, and that's not including snacks and people go in there for drinks and stuff like that too. So they have a they may be they may face competition, but they have an enduring kind of model that people just can't get away from, right?
Yeah,
So
I agree with that.
I think it's pretty hard for anybody to compete. I think their mode is pretty rock solid, actually. Um, okay, let's look at the next question, which is what is the company's long-term prospects for and runway for growth? And so what we mean by that is, can the company, double its revenue, in the next 5-10 years? Is there a lot of room for it? I mean, we've already talked about 119 countries. That doesn't leave a whole lot of other countries available to target, right? That they're probably serving close to 80% of the world's population at this point or more.
Yeah.
So what do you think
So
about that?
so just want to shine a light on a couple of things that they're doing to try to make sure that they have prospects for growth. So a couple of things that they mentioned in the 10K that I think is worth pointing out is that they're doing their best, right? I mean, they're McDonald's. Let's be honest, they're not a growth company. They have kind of reached their peak, and we'll talk about the top line growth here in a bit. But they are doing things you know to catalyze growth, remaining growth that they might be able to achieve. So, for example, they are bringing in digital tech into their offerings. So like their apps, they have their apps, they have their self order kiosks to reduce costs. They also have this sort of personalized outdoor digital menu. So you can think of if you have your app and McDonald's know your purchasing behavior. If you walk up to a dashboard, the menu might change for you, just for you. Things like that. They're doing things to kind of make sure that customers keep coming to McDonald's and things like that. So they are putting forth some effort, and also delivery is going to be kind of big. It is growing. So delivery market has grown from 1 billion to 4 billion from 2016 to 2019. So there are spots of growth that you can see in McDonald's, but if you talk about the top line growth, generally speaking, it has been actually negative. So compounded annual growth rate in terms of top line for the last 3 years has been negative 5%. If you look at the past 5 years, it's the same, about 5%, negative 5% growth. If you look at 10 years, it hasn't grown at all. It's actually about 0.76%, negative 0.76%. Basically, it has flat. The top line has been flat for the last 10 years. But they are doing a few things to kind of squeeze the juice, if you will. So and we'll talk about this more in the next episode, but they're doing things like shifting business more to the franchisee model. They're also doing a ton of buybacks and things like that. We'll talk about more about these things in the next episode. But going back to your question, top line growth, it's not a growth industry. They're not growing. They haven't been growing for 10 years.
So, I mean, I think one of the things that we should consider here is that McDonald's may own other brands outside of their flagship. Obviously, if their top line revenue is not growing, that's one thing. But, in the 10K, do they talk about any other businesses that they either have an ownership stake in or are potential, that they could use to acquire, to make meaningful changes in their growth rate, or are they focused mostly on the McDonald's franchise?
They're really focused on the McDonald's franchise, at least in the 10K. They did talk about this one acquisition, and I looked it up. Just general Google search. They acquired this company called Dynamic Yield, and this company is a startup. I think they haven't really declared exact purchase price, but some say it's about $300 million. It's really drop in the bucket for them. But they purchased them to get this kind of digital experience into their store. That's the only thing that they really highlighted in 10K.
Okay. Well, let's keep going then. And does the company require a lot of capital reinvestment to maintain its business? And I think the second part of this was, can it grow without any reinvestment? So I think the answer to the second question is a no. But looking at that first question, this is an important one for a business that's kind of stable to declining. Do they need to, in order to prop up their revenues, do they need to reinvest in the business? You talked about order kiosks as a cost saving measure. Is that, the best use of their money? What is the, what do they need to do to, I've been in several McDonald's because I'm a pig, and, I eat like I hate my body. So, and many of them have been refurbished or, updated, in the last 3 or 4 years. So, obviously that money is coming from that reinvestment line. So, what do you see there? What do they need to do to maintain their business, going forward?
Yeah. So if I look at their CapEx, and they actually do a good job of breaking down the CapEx into kind of maintenance CapEx and then new CapEx. And maintenance CapEx is basically like you said, Hari, updating the fixtures, updating the kiosks into self-service kiosk, things like that. And if you look at that segment, just to give you kind of ballpark, capital expenditure total CapEx is about $2 billion. Okay. Out of 2 billion, about 1.7 goes into existing restaurants, and that's been the case for the last 3 years, at least. And so, for majority of the CapEx is actually going to existing restaurants, maintaining them, updating them. But about 500 million, 600 million CapEx is going into new restaurants. So, going back to your sorry.
Yeah, so I mean, with that, are you saying new restaurants? Is the number of restaurants growing, or is it stable? They're just shutting down old ones and opening up new ones.
It's actually net positive. Net new, there is about, in the last year, net new about 1,000 restaurants. I suspect the majority of that is going to come from outside of the U.S. in growing markets like India or China, for example.
Okay. Well, we'll keep going, and then probably summarize a little bit of what we've talked about here. Does the business have any problems with relationships with any of the following: customers, suppliers, employees, regulators, etc.?
No, not that I can see. I mean, it's such a big company, right? The size of it, the scale of it, operating in 119 countries. You can think about all these very unique jurisdictions that have unique laws, and there's just a lot of overhead in operating in all these different countries. You also have to think about currencies and things like that, and so it is very complicated to run businesses like this. And I'm sure if you look into this company with magnifying glass, you'll see red flags here and there, but from the global level, there isn't a big flashing red light that I can see.
Okay. Well, I mean, as with any simple business, it's not, the one of the things that you'll do as you get comfortable with investing and reading 10Ks, you find that simple businesses are probably are refreshing sometimes. Sometimes businesses can get very complicated. I think anybody who is, listening to this could read the 10K and basically come to the same conclusions that we are, right? This is not a very complicated business to understand, despite their size and their scale. It's a relatively straightforward business to understand. I mean, they make food, people buy it. Yes, they're shifting into various different quote unquote growth areas like, food delivery services. They're opening stores, closing stores but for the most part, this is a fairly straightforward company. So I think, we'll wrap it up for this episode, but in the next one, we'll talk more about the financials, management. What do we think this company is worth? And are there any financial gotchas that we need to be worried about here?
Yeah, that sounds good.
All right.
Awesome.
Well, I just want to, before we close, I want to make sure everyone knows, we have a robust community of value investors on our Slack channel. If you would like access to that, or if you'd like to use the checklist that Becco and I have been using during this podcast, you can email us at info@valueinvestor.org. On our Slack community or via email, you can also ask us any questions that you may have about McDonald's or any other company that we've talked about, or if you want to make suggestions for a new company for us to talk about in the podcast. So, we're happy to have you guys, and if you're new to joining us, I mean, we're in the hundreds of episodes at this point. And if you're trying to get started with value investing, we would highly recommend the first 30 or so episodes of the podcast, where we kind of break down the basics of value investing. So, we really appreciate that you're tuning in, and hope to hear from you either on Slack or via email, and hope you catch all of our previous episodes as well.
Excellent. Great. Thanks you guys for joining. I'll see you on the next one.
All right. Thanks.